So first of all, thanks for having me. I look at a day like today where you see Facebook, Meta, I should say, down a bunch. And I just think about a great business trading at a really low price. I mean, when you think about their earnings, revenue actually beat. It's the expenses that were a little higher. And so the earnings were not as good. And clearly the guidance on earnings moving forward wasn't as good. But I see a stock trading at 17 times earnings now that I think is really investing in the future. And I love Meta down at these prices for sure.
But isn't the stock a little trapped in the sense that it reminds me of any maturing company where they can just kind of settle into a strong earning, capital return kind of stock, or they can try to invest in order to get back to those high growth days where they get a higher multiple and they might have stronger annual performance. Don't they have to pick one of those two camps? If they try to sit in the middle, won't they just be penalized with a low PE, but not the growth and not the shareholder performance in the long run?
I think you brought up a great perspective. For sure, being in the middle, is not a good place to be. But I'll tell you, I still view Meta as a growth company. And what do growth companies do? They reinvest their profits into the future. They invest in innovation. And I think Meta's really been at the forefront of an innovation in a lot of ways. I think in other ways they're playing catch up. But I think a stock like Meta, which I still think is the ultimate advertising platform between the Facebook site and the Instagram site. I think these are incredible businesses. I think the Reels business has a lot of potential as well. So I like the fact that I could buy a great company at a really low valuation. I think in the long run, they will benefit from the investments they're making in things like the metaverse.
So what else in FANG are you kind of sniffing around at?
Well, what's funny, it's like you got to be careful sniffing around the FANGs at all right now, right? You talk about a sector rotation. That's what we're seeing right now. We're seeing growth going, south, and we're seeing value going north. We're seeing folks now looking at these old line companies that trade at low valuations, that pay big dividends, and saying, look, why wouldn't we want to own these? Why would we ever think about owning these growth stocks? And so you've got to be careful with the FANGs right now if you're worried about what happens tomorrow. Like I look at a stock like Meta. I think it's going to go lower before it goes higher. I look at Netflix, which has gotten clobbered. I think it's a great business. I think it's also a great time to buy. I like the FANGs. I just think that right now it's kind of like they're losing the beauty contest at the moment.
Okay. So if someone said to you, and it's interesting, if you look on Wall Street Bets today, they're basically seeing huge retail interest in buying Meta here. Do you think that's prudent?
I do. I'm surprised that there's huge retail interest, right? Because often folks on the retail side do the opposite. They see a stock selling off and they start selling. I think it's a smart thing to do this time. Again, I think it may go lower, so you may regret it in the short run. But I think in the long run, a stock like Meta is going to double. It's just a matter of how long does it take for that to happen, and is it a smooth ride or a bumpy run? I think it'll be bumpy.
Well, I think people who are in it today have a better shot than maybe the ones yesterday at getting that double in the near term. Allan, thanks so much. It's great to get your perspective today. Thanks for joining me.